Good afternoon, this is Clayton Ream with Van Aunen Company with your January 19th afternoon grain and livestock closing commentary. Today the markets, I guess, after the long weekend, get a little stronger tone to the markets with actually a good old-fashioned little bit gap and higher start for the grain market pertaining to corn and beans. Both markets able to close up almost a nickel on the day with really the positive outlook of the market right now is with February crop insurance coming ahead of us. The big USDA crop report now behind us that was a little bit more neutral, a little friendly, showing that last year's production was still a record, but nothing that too extreme to take us substantially lower. So now the markets kind of shift their attention to the demand aspect of it here for the next 3 months, along with U.S. weather and the extended weather model. So getting into the nuts and bolts of things here. We got kind of an upward price movement target of about $3.75 off of corn, potentially $3.80 off of March. Get that beans into that $9 area to $9.20, and it's going to be kind of a key focus here with this week now being a shortened trade week with exports released now on Friday versus Thursday to be important for these markets to continue to firm as we work through the week. Otherwise, the bears can come in and say, hey, enough is enough. The overall fundamentals kind of remain bearish and start to pressure the market down again once again. So it's going to be an important week of trade, but we started out firm, and that's a positive for the grains. There was a positive export sale for corn this morning as well to help firm the market here today to start the week. Over in the livestock markets, not a lot of action. We had that sharp down day on Friday for the cattle markets, recoup some of those losses with the expanded limits, but nothing over the top with cattle, fat cattle only being able to gain about $1 up front. Feeders actually did get $3 higher, but now only about 60 cents here this afternoon. So just really gathering the show list, see what the appetite of the packer is going to be, and if the feedlots, so with these cattle on feed reports that we've had the last few months, are going to have at least slightly tighter numbers to work with to help firm the futures market and the cash market. Product is a little softer, so we need to be on the lookout for that. If that continues to soften, maybe that's going to be the underlying factor that leads to maybe additional downside pressure for the cattle markets. Over in the hog markets, we're seeing these hog numbers continue to tighten up as kind of expected. Futures market reacting. We're about in that 63 area after the Feb contract. Cash market had a nice jump here, $2 from Friday to Monday. Seeing those kills tighten up to help support that logic as well. And now the key focus is going to be, is there a little bit of enough profit margin to show a little bit of expansion once we get through all the way out to the June, August, and basically fourth quarter of next year. So futures market should have a little bit more strength, but once again, maybe only going to be as good as the cattle markets. Getting over to the outside markets here this morning, the energies really kind of took it on a chin again with crude now down 90 cents, heating oil losing as well, and then the RBOB market kind of holding in. We do have, again, the API and EIA energy reports. Those will be delayed, so we'll get the first one Wednesday, the second one on Thursday versus the typical Tuesday, Wednesday schedule. Kind of just searching out a bottom. In the outside and the Dow and the stock markets started a little bit firmer, but we're unable to hold that as the economic concerns overseas continues to be a building tone of the market. The dollar also continues to hold in this tight trading range between 98 and 99 cents. Also started firm but started to soften throughout the day, which may be one of the supporting factors for commodities in the grain markets and meats potentially moving forward as well. So most importantly, I guess it's going to be that dollar, the influence, and then the demand moving forward for producers to be paying attention to. But we hope, and we're kind of expecting a little bit of a firmer undertone as we work into February, and hope that we can hold that all the way to the end of February before we really start to jump on some deferred 2016 new crop grain marketing. As always, trading in futures options provides risk and loss that's not suitable for all producers.